Hey everyone, and welcome back to the channel. Today, we're diving into some potentially troubling news for the king of AI chips, Nvidia. Is the party finally over? Are we looking at a major slowdown? That's the question on everyone's minds after analyst Dan Niles sounded the alarm. We're not just talking about a little blip here. Niles is suggesting a significant impact on Nvidia's revenue growth. Buckle up, because this could get bumpy. Think of it this way. What if the very foundation of the AI boom, the chips that power everything, suddenly hit a speed bump? That's what we're exploring today. Is Nvidia invincible, or is it facing a perfect storm of challenges? Okay, let's break down the situation. First, the headlines. Is Nvidia losing its momentum? And Dan Niles saying the chipmaker will see a slowdown in chip demand. The core of the issue is that major players, like Microsoft, might be cutting back on their capital spending, especially in the AI infrastructure sector. That impacts Nvidia directly. It's like the main investor suddenly pulling out of your startup. Not good. And it gets worse. Nvidia's gross margins are already dropping, and Amazon is throwing its hat in the ring with the Trainium 3 chip, a direct competitor. Suddenly, Nvidia isn't the only game in town. Think competition is a bad deal? Let me tell you, it's a bloodbath. The big question is, can Nvidia maintain its dominance in this increasingly crowded and competitive market? Are they ready for Amazon to steal their lunch money? Let's zoom in on Microsoft's decision to cut capital spending. This isn't just some minor adjustment. It's a significant event that sends ripples throughout the entire tech ecosystem. Microsoft is a huge customer for Nvidia. If they're tightening their belts, it means fewer chips are being bought, less demand for Nvidia's products, and ultimately, a hit to their revenue. Imagine being a farmer, and the biggest grocery store in the region decides they don't need as many vegetables this year. That's the kind of impact we're talking about. Is this a temporary hiccup, or a sign of a bigger shift in the market? Is the AI arms race slowing down? That's the million-dollar question. Now, let's talk about Amazon and its Trainium 3 chip. This is a direct challenge to Nvidia's dominance in the AI chip space. For years, Nvidia has been the undisputed leader, but Amazon is saying, hold on, we can do this ourselves, and maybe even better. The Trainium 3 chip represents a serious investment by Amazon to reduce its reliance on Nvidia and potentially lower costs. Think of it like this. Amazon is building its own factory to produce its own cars instead of buying them from the established manufacturer. This is huge. This could lead to price wars, reduced market share for Nvidia, and a need for Nvidia to innovate even faster to maintain its competitive edge. Can Nvidia fend off this challenge from a tech giant like Amazon? And don't forget the stock market. As the article mentions, even beating earnings estimates isn't enough to prop up Nvidia's stock if growth expectations aren't met. The market is a fickle beast. It's all about future potential, not just past performance. If investors start to believe that Nvidia's growth is slowing down, the stock price could take a serious hit. We're talking about potentially significant volatility here. Remember, Nvidia's stock has been on a tear for the past year, so there's a lot of room for it to fall. Are you prepared for a potential Nvidia stock correction? Is your portfolio ready for the storm? But the bad news doesn't stop there. We also have to consider the potential impact of Donald Trump's tariffs. The headline screams, Donald Trump's tariffs are punitive and could cost jobs. Frank Lavin, a former U.S. ambassador, is warning about the potential negative consequences of these tariffs. Tariffs increase the cost of imported goods, which can make businesses less competitive and lead to job losses. It's like putting a tax on doing business. Nobody wins in a trade war. This could further complicate things for Nvidia, especially if it leads to retaliation from other countries. Are tariffs going to be the final nail in the coffin for Nvidia's growth? Let's get real about how these tariffs impact everyday life. Manufacturing companies that rely on imported components will face higher costs, potentially leading to reduced production or even relocation of operations. Retailers may have to raise prices to offset the cost of tariffs, which could reduce consumer demand. Suddenly, that new gadget you want to buy is a lot more expensive. It's a trickle-down effect that impacts everyone. Are you ready to pay more for your electronics because of tariffs? This is not just about Nvidia. This is about the entire economy. So, let's recap. We have potentially slowing chip demand, increasing competition from Amazon, and the looming threat of tariffs. That's a triple whammy. It's like being caught in a perfect storm. Each factor on its own is a challenge, but combined, they could create a major headwind for Nvidia. Is this the beginning of the end for Nvidia's dominance? Or can they weather this storm and come out stronger on the other side? That's what we're going to explore further. Let's dive deeper into the specific risks. From a technical perspective, Amazon's Trainium 3 chip poses a direct competitive threat. If Trainium 3 achieves a significant leap in performance and efficiency, Nvidia's market share and pricing power could be seriously eroded. This is a classic case of technological disruption. It's like the electric car coming along and threatening the dominance of gasoline-powered vehicles. Can Nvidia keep up with the pace of innovation, or will they be left behind? On the business side, the biggest risk is a decline in demand for Nvidia's chips. This could stem from several factors: reduced capital spending by major players like Microsoft, market saturation, or customers exploring alternative solutions. It's like a restaurant that suddenly sees fewer customers coming through the door. They need to figure out why, and they need to act fast. Is the AI infrastructure market reaching a point of saturation? Are companies finding that AI isn't delivering the promised returns? These are critical questions that Nvidia needs to answer. And let's not forget about the financials. Slower chip demand translates directly to a lower rate of revenue growth, potentially disappointing investors. The drop in gross margin from 78% to 74.5% is also a red flag. Increased competition or rising production costs could put further pressure on margins. It's like a company that's selling fewer products and making less profit on each sale. That's a recipe for trouble. Can Nvidia maintain its profitability in this increasingly challenging environment? Now, let's talk about the ethical implications. The rapid adoption of AI powered by Nvidia's chips could lead to job displacement in various industries. This could generate negative public sentiment and potentially lead to regulatory scrutiny. We need to be mindful of the potential social consequences of this technology. Are we prepared for a future where AI takes over many jobs? What kind of safety nets will be in place for those who are displaced? Furthermore, the use of AI powered by Nvidia's chips raises concerns about data privacy and security. If Nvidia's technology is used to collect or process sensitive data without adequate safeguards, it could lead to ethical and legal problems. We also need to be aware of the potential for bias in AI algorithms. AI algorithms trained on biased data can perpetuate and amplify existing societal inequalities. It's crucial that we ensure that AI is used responsibly and ethically. Are we doing enough to prevent the misuse of AI technology? Okay, now for something completely different. The news also included a tidbit about NYT connections, the word puzzle game. What does this have to do with Nvidia? Well, it's a reminder that even in the midst of all this high-tech drama, people still enjoy simple pleasures and mental challenges. It's a reminder that technology should serve humanity, not the other way around. It's a little Easter egg. It's a reminder that not everything is about high-tech and high finance all the time. It's a reminder that we need to balance our obsession with technology with a focus on human connection and well-being. So, what's the bottom line? Is Nvidia doomed? Absolutely not. Nvidia is still a powerful and innovative company, but they are facing some serious challenges. The next few years will be critical for Nvidia. They need to navigate these challenges carefully and continue to innovate to maintain their leadership position in the AI chip market. They need to adapt to the changing market dynamics, address the ethical concerns surrounding AI, and ensure that their technology is used for good. Will Nvidia rise to the occasion? Only time will tell. Thank you for watching. Don't forget to like and subscribe for more tech analysis. Now, I want to hear from you. What do you think about Nvidia's future? Are you worried about a slowdown in AI chip demand? What impact do you think tariffs will have on the tech industry? Let me know your thoughts in the comments below. And don't forget to share this video with your friends and colleagues. The more people who are informed about these issues, the better equipped we'll be to navigate the challenges and opportunities that lie ahead. Thanks again for watching, and I'll see you in the next video.